This is 95.3 Business Now.
Welcome back, everyone. Nigeria's inflation surged to 33.2% for the month of March 2024, and that's according to the latest data from the National Bureau of Statistics. Meanwhile, the Statistics Office also reported the country's food inflation at a record high of 40% last month on the back of rising food prices, high level of imports, low domestic productivity, the removal of fuel subsidy, and the dwindling value of the naira. Reading the tea leaves of the latest inflation for me is Temitokpe Omosui, an investment strategy manager at Afrinvest. A great Tuesday morning to you, sir, and welcome to the show.
Good morning. Thank you for having.
All right. What do you make of the latest March inflation data vis-a-vis your outlook at Afrinvest?
All right. Thank you very much once again. We knew that inflation would accelerate, and especially for last month, right? Because we've seen a series of factors. Some are quite recent, and others have been lingering in the economy. For instance, we knew that the FS pressure will continue to keep prices elevated, and we're talking about insecurity for a very long time now. That has not improved. So we look at all of these factors in addition to the conversation about free subsidy, because once with Nigeria, once you talk about free subsidy removal, there is speculation and all of that, which really take a toll on prices. So we knew that inflation will still stay sufficiently above 33%, and we don't think that things will change materially anytime soon.
Given that you were expecting this, what are the fundamentals of Nigeria's stubborn inflation?
It's really very disturbing to know that a country that is not in war, right? Let me put it that way, because if you are to talk about countries that are in war, Ukraine, Israel, I'm sure that you'll be surprised to know that inflation in this economy, right? Inflation rates is less than 5%. Russia that had similar issue of war and all that, inflation is not even up to 10%. But here we are in Nigeria, where we are not having a major war. Yes, there are pockets of insurgencies and insecurity here and there. So for the factors that are responsible for the current inflation, what comes to mind is the components of inflation. In Nigeria, right, more than 50% of our inflation basket is food. So anything that affects food and energy security in Nigeria, would continue to impact inflation. For instance, we talk about the surge in the price of the US dollar. I mean, the depreciation of the naira before the recent appreciation on the back of some strategy deployed by the central bank, right? That took a toll on inflation, because if you look at the survey of the NBS, National Bureau of Statistics, in 2019, it was broken down that 56% of Nigeria expenses is on food, right? And it's not because Nigerians eat a lot. No, it's actually because we earn too little. Not that we eat a lot, but people earn very little to even meet basic needs. So what that means, and if you break it down further, you would observe that rice, vegetable, and other items account for the topmost when it comes to the food we consume most in Nigeria. In fact, rice is number one. And you and I know that our local production is not even to meet demand, which means that inflation is highly susceptible to FS issues. And we talk about a lot of, on our tables at home, you'll find a lot of manufactured products, from your semovita to your, all sorts. We have all of that, and most of their components are either imported, right, which is susceptible to FS volatility, or some of these companies are leveraging backward integration. And what I mean by backward integration is that some of them already have their farms, the likes of Fresco and all that. They have their farms. But again, we talk about insecurity. Farmers are scared to go to farms, irrespective of the fact that these companies are considering backward integration to mitigate the impact of FS. So it's double whammy. On the one hand, FS challenge. On the other hand, insecurity and infrastructure. Let's imagine a situation where farmers are finding it difficult to bring their product to the market, because you and I know that the largest market are the urban area, the core area in Abuja and the core area in Lagos. So if you look at all of these factors, in fact, yesterday I had to talk to a consultant, a consultant in the agriculture sector. This person was telling me that there's a case of so much money chasing field goods in the agriculture sector that some companies have even paid for crops that have not been harvested because of shortage of supply. So, and why? Because farmers are scared to go to farm. The few ones, you have to pay through your nose to get it, and all of these are adding up. So it is very important to just look at inflation from the angle of food and energy security, but on the front burner is food security.
All right. Well, again, read the first quarter inflation peaking at 33.2 for me, 2% for me, in relations to yields on fixed income assets and other risky assets within the same January to March period.
Well, so for the peak of inflation, I think that's a bit dicey. As a matter of fact, the CBN thought that inflation will peak in May at 33.5%, right? Well, we're already at 33%. So if you are to add, the fact that in Nigeria we have this behavior that prices don't go down once they are up. Look at we've seen increase in pricing since 2016 economic recession all to date. So if you look at all of that on the conversation around the peak of inflation, I think we are not seeing the peak, not even next month, but how this is affecting the fixed income market. Yes, we know that the CBN has tried to jack up the rate of OMO to about 26-27%. That's in terms of yield. The discount rate is around 20%, right? So I suspect that they might want to wait to allow this policy to have impact on the economy before considering a further hike. And even if there's going to be another hike, maybe just 50 basis points. And on the market, market is moved by different factors, not just inflation, the condition of liquidity. We expect that the interest rate will stay elevated for the next 2 to 3 months, but we think that it could decelerate. Before the end of say Q3, it could decelerate.
What is your forward guidance at AfriInvest on inflation and the market as we go deeper into the second quarter?
Yes, thank you very much. Why we think that the current high level could linger for another 3 months, we also think that before the end of the year, we can begin to see inflation at 25% level. That does not mean prices would drop, right? It just means that the price increase would decelerate, on the back of a base effect. So That's the story we are telling to our clients about the direction of inflation.
All right. If you can just give me this final answer in 30 seconds. The IMF forecasts Nigeria's inflation at 23% in 2024 and at 15.5% in 2025. What's your take in 30 seconds?
Well, they look a bit realistic if you are looking at the year-end inflation outlook, right? They look realistic, barring a major shock before the end of this year and next year. Otherwise, the trajectory could change if there's a major shock around food and energy, which are the key driver of inflation in Nigeria.
All right. Thank you for sharing your insight with us, Temitope Omosui, Investment Strategy Manager at AfriInvest. Have a great day, sir.
All right. Thank you. Bye.
All right, so we've come to the end of the conversation. That's your business now for this Tuesday, the 16th of April. I am Aramide Folorunshaw. Do have a profitable day ahead, everyone. It's bye for now.
This is 95.3 Business Now.